Let's get a check of the market mania. Joining us now is Juli Niemann. She's the Executive Vice President of Smith Moore. Good to have you with us. We are checking in to find out where you would perhaps do some investing. The market is at record levels. What should people do if they want to get into the stock market? Wait or proceed?
This is one time, and it's been some time since we've seen this, it makes sense to go into sectors and be patient. Look at what the economy is doing and what is sustainable. And there are still some good opportunities out there. Probably the biggest one is in bonds. For the first time in a long time, and we're talking 15, 20 years here, we've got yields that are actually very attractive, still very attractive, and that we have the Federal Reserve to thank for. People, once again, are getting good rates on their CDs, money markets. Everything has come back nicely. Don't expect this to last that long. At some point, the Federal Reserve will start cutting rates again, but they're not going to be hot to trot here because it took them too long to get inflation to the approximate levels where they want to be. So they're not going to go in and really lower the boom here and take rates down quickly. The markets are way too optimistic on that. So underlying markets, there are some good values out there, and you can build a good balanced portfolio out there even now.
What else are you watching in the market, Juli?
Probably the biggest thing is institutional ownership. We're seeing institutions begin, especially in the mutual fund area, starting to put more back into work. You always see a lot of tax stressing at year end. They're a little more optimistic at the beginning of the year and putting that cash in, a new 401k contribution coming in. So they have money coming in from employed people. And a lot of that is retirement money and retirement funds. So they're looking for places to put it, but they're also going in with a sharper pencil. They want some good valuations. There are some good value stocks available out there, and bonds are still good, and they're not going to be that good for much longer. So I think you're going to see a good strength in the stock market for at least in that first 6 months. But watch that labor market, because that will be the indicator of when we're going into the next recession. This time it could be for real. The last 2 years, it's been all anticipating, and it's never materialized. And this sense of gloom has hung over the American economy. Oh, we're in a terrible situation. We haven't been. We've been recovering beautifully since COVID, but nobody believed it. Nobody felt good about it. Now they're optimistic. But watch the labor markets, because when that starts to really slow down, that will be an indicator that we may have a mild recession ahead of us. Look for that time frame, possibly in the second half of this year.
Always good to get your thoughts. Thank you.
Thanks for having me on the show.
Go to businessfirstam.com for where to see our show on TV.